Hey guys, and welcome to Memecoin Academy. This is our very first episode of Memecoin Academy, and I would like to welcome you here today. Now, first of all, I'd like to read you the disclaimer as usual. This is not financial advice. Anything that's said in this video is for entertainment purposes only, and do your own trades at your own risks. Any trades you see here will be paper trades. So now that's out of the way. Welcome to Memecoin Academy. This is our very first inaugural episode. And on today's episode, I'm going to introduce you to our trading strategy. So it's going to be very basic, very straightforward video. I'm not going to go in depth today on the strategy as a whole, but I'm just going to give you a example or a few examples of how I find trades and how we use confluence to enter these trades. Now, trading itself it's a game of probabilities, right? It's about having the most probabilities in your favor to enter and exit the trades. That's the simplest way I can describe it. So I'm going to show you today how I enter trades, and specifically on meme coins. Now, a little bit about me. I've been a cryptocurrency trader full-time for the last 8 years. I have run several businesses trading cryptocurrency. So the experiences I've learned in that, I would love to share with you guys and to give you the best edge in this market. Because let's be honest, the cryptocurrency market is ruthless and it's a minefield, okay? And 95 to 98% of traders lose their money. Now, if cryptocurrency is a minefield, then this meme coin space is the atomic bomb of financial destruction. You will get wrecked. There is no doubt about it. You know, you can't be a boxer per se and think you're not going to get punched in the face, right? Because you are. You're not going to go in there and not get hit, right? It's the same thing here. You're not going to come in here and you're not going to take losses. You are going to get hit. The problem is with meme coins is it's not in your favor, okay? The house wins majority of the time in meme coins. In normal crypto as well, like the top 100, you know, you'll take losses, but there is a lot more data. There's a lot more volume, more transactions, more history that you can go off, you know, more financial backing of these projects, more risk for these big companies to lose by investing in these, which is less likely to rug, right? The meme coin space is a totally different kettle of fish. You know, you've got anyone and everyone that can create a meme coin today on your pump.funds or your gas pumps or your moonshots. Any man and his dog can create a token these days, which is what makes this so volatile. Now, we have to be very careful here about how we select our tokens. But for the sake of today's episode, I'm just going to walk you through the technical analysis side of it and how I identify trade setups for scalping, right? Predominantly how this works is we look at trade setups for scalping that can turn into a swing trade, okay? So a day trade scalp that can turn into a swing trade. That is probably the best way that you can maximize your return and also mitigate your losses. Now, on top of that, the number one important thing, the most important thing in trading, and especially in trading meme coins, is risk management. Okay? So what do I mean by risk management? Well, for argument's sake here, risk management means is you protect your capital at all times. There's a couple of sayings here in the crypto space. One is that scared money don't make money. Scared money don't make money. Now, I'm going to contradict that saying with another saying that's used in the crypto space a lot. And that is, the best trade you take is the one you don't make, or the one you never make. Now, these two sayings, they contradict each other. You're saying, well, hey, Brad, like, why are you saying to me, scared money don't make money, so I should ape in this trade? But then you're telling me you shouldn't take that trade. I shouldn't ape into that trade because the best trade is to not take one. What are you saying? Well, what differentiates the two here, and what can give you a clear conscience in this space, is risk management. Okay. Having proper risk management will give you the ability to clear your conscience to make the correct trades, to base your trades on the technicals that are in front of you, the data that's in front of you, okay, to be able to find the best setups for you to enter your trades and exit. So, what is proper risk management? Now, proper risk management is not aping in to a trade with your whole portfolio. You don't have, for argument's sake, 10 SOL, right, in your account, and you dump that 10 SOL on one trade, one token, hoping for that moonshot, because you will get wrecked. There's no doubt about it. Everyone does. Everyone in this space gets wrecked. The people you see that turn one SOL into, turn $200 into 20,000, or turn into 200,000. That is rare. It doesn't happen every day. Not like it's promoted, not like it's shown on YouTube. A lot of these titles are just clickbait, right? But I'm here to tell you today that it can happen. But the way you've got to make it happen is you've got to correctly position yourself with proper risk management and get yourself in a position where you can enter the trade, right? Take profit, and then, as some people call it, leave a moon bag. Or how I like to call it is to take profits, right? Take profits at different levels, okay? Because the aim of the game of this market, or any market, is to pay yourself, right? You don't want to leave yourself in a position where you take a trade, it goes up, you're up 200%, 300%, and you think, oh, yes, this is going to go up to 1,000%, 10,000%. I'm just going to let it ride. No, you have to take out your original investment, number one. Take out your original investment so you're break even, right? You're free and clear. Once you do that, it's up to you what you want to do. Not what I'd recommend is to just break even and let it ride. But if you want to do that, at least you're in the free and clear, okay? Step number 2 is take profit a second time. Take profit too, right? Take out your initial investment, and then when price goes up another 200%, 300%, if you're that lucky to be in a trade that does so, take a second load of profit. Take another 25% off the table, and then let it ride. It's up to you how you want to take these profits, but it's a strategy that works, and it's a winning strategy. Because success isn't built on one big win. It's built on lots of little wins. Lots of little wins get you to the destination, to get you to that financial success, the position you want to be in, gives you financial success. So I'm here today to show you how to find some of these trades. Now, first of all, I've just got a random one here called Perpay, which I found. Now, this one has been going for some period of time, right? So I'm just going to show you here how we look at and how we find these things. So this one started back in 16th of June. Okay, so there's a few things we can use here at our disposal, right? This is the initial phase. This is when it first launched, right? And as you can see, Pepe has done a lot of percent since then. It's made some serious gains. Now, how, the idea with these coins, whether you're in the first wave or we'll call that wave one here. This is your second wave and your third. Although it's a bit of a disjointed second wave, I would basically call that the second wave. But anywho, for the sake of this example today, we're going to look at how you get yourself into a position here to make these gains here and make these gains here. Okay, so first of all, what we're going to look at is, let's use some tools here. Now, today we're using Dex Screener. Now, if you've been a trader for a long time and you use sites such as TradingView, one thing you will know about Dex Screener is that the tools are limited and the features are limited. So if you pay for Pro or you pay for Premium on TradingView, you will not have the same functionality as you will on TradingView, which we will cover in another video where I can show you how you can utilize TradingView for these tokens. But for today, we're going to look at the tools on Dex Screener and how you can utilize them best to find these tokens. So over here on the left, we have our toolbar, okay? And if you click the arrow on the trendline tools, you have all these different tools come up. Now, we can use all these. You pretty much have the same list on TradingView, but you can't do any features like save to object tree or basically save any of your settings of if you have any horizontal rays as saving those as specific support and resistance flips. You can't save them and just add them in, right? But today we're gonna just use these as is. So what am I saying first of all? So first of all, we've wound back the clock and we've gone to where Pepe first started, which was back in June. So the first thing that I want to look at is, the first thing I do straight up is I take my Fibonacci retracement and we take it from low to high, okay? Now, whether you're doing Fibonacci retracement or expansion, okay, you always take the Fibonacci from left to right. Or if you're doing expansion, left to right. High to low, bottom to high, high to low, okay? So straight up what we see here, so we've taken it from the starting point up to the first high. Sorry, this first high here, right? Now, in this section here, for me, this wouldn't have been a trade, right? Because what's important, the important levels here, which I've marked out here so you can see more clearly, are the 886, and this is Fibonacci retracement, 886, the 0.786, and the 0.75. Now, the other very important level in cryptocurrency, and the most important, and also in pretty much trading as a whole, whether you're trading, equities or whatever, Forex, is the 618. Now, the 618 is known as the golden pocket or the golden support. Now, it's the inverse of the 0.618, the 1618. So the 1618 and the inverse, which is the 0.618, are the most critical levels and called the golden pocket levels of Fibonacci, okay? Now, for the sake of meme coins and a lot of altcoins, one thing that altcoins and especially meme coins respect more is the 786 level. Why is that? Now, the 786 level is respected generally because of the volatile nature of meme coins and altcoins, right? The volume percentage gains and and volume percentage declines, swing very heavily, and the volume can be lower, which means that the price swings can be a lot more extreme. So you would tend to find in altcoins and in especially in meme coins is the price respects the levels of the 786 and also the 886, the 0.886 level, right? Now, what I've done here is I've done the 0.786 and the 0.75. Now, the 0.75 is another very important level, okay? A very important retracement level. So what I call this, instead of it being the golden pocket of the 0.618 and the golden pocket of the 0.618 will usually be the 0.618 and the 0.65 or 0.66, right? Which is known as the golden pocket. I like to call this the blue pocket. The blue pocket for meme coins, which is the 0.75, 0.786 level, okay? This is the highly respected level. This is the level where you'll find some of your best golden setups. Now, add to that the 0.886. Now, this whole area here is critical, right? Now, with the 886 here, that is red on my Fibonacci because that's the line in the sand for me. Once price action goes below this, that's the end of the road. I don't. If price does not respect the 886, I'm out of the trade, right? If it goes lower than the 886, well, that's a whole different strategy altogether. And for today's video, we're not looking at that strategy. That's for a later date. But for today, we're just looking at the 786, the 75, and the 886. So first of all, we take it to high to low. So we have low to high, right? So where does it end up? So first of all, we have price coming down, and here we're on a 15-minute chart. So in meme coins, that can be considered quite a long period of time, especially if they're new. So what we can see here is price comes up, peaks, comes down, finds support in the blue pocket here, like perfectly fine support, comes back up and retraces. Now, it doesn't quite make the 886, but then this is our area of support, right? It basically we have a small swing failure pattern here of this candle here, right? Price comes down, up, swing failure, finds support, and then pumps. Okay, so this here would have been an entry point, but at the moment, we're not looking at this one because what we need to enter trades is more than one level of confluence. Okay, so for me, saying this just as is, that's not a trade for me. We require more than one level of confluence to enter a trade. So a lot of YouTubers and a lot of technical analysis gurus will use Fibonacci alone. Okay, they'll use Fibonacci and they'll look at volume and they'll say that's a trade to enter. For me, that's a no. Okay, you are gambling more, and the probabilities are not in your favor if you use 1 to 2 levels of confluence. Right? What we need is 3 and or 4 levels of confluence. Okay, that's what we need. We need to enter a trade. Okay, so now how do we find these levels of confluence? Well, confluence we can call one is Fibonacci retracement. Okay, Fibonacci, it's come down, it's entered our zone, it's broken down through the blue pocket down to the near, it's front ran the 886. We've swing failed the previous low, right? Swing failure pattern is where price comes down, right? It swings under the level, it comes back above, finds support, and then goes. That's a swing failure pattern. So in this regard, that's 2 levels of confluence. 2. Number 3, are we backed up with volume? Well, here it's hard to see. Okay, it's hard to see volume on the 15-minute chart this early in the piece. So what we'd have to do is go to a lower time frame, which I'll have to scroll back. I won't bother at the moment. But one indicator that this does offer, which does help a lot, is called the on balance volume. So OBV, on balance volume, we can click that, and up comes this little chart here. Okay, so this is actually quite helpful. Quite helpful to give you an understanding of what's happening. So let's have a look here. So what happened here? Okay, now we're looking at the volume here. We had this swing failure pattern, comes down, comes back above, right? So as you can see, at this point, volumes start to increase. Now I'll actually go back to I'll go to a 5-minute chart here because it'll be a lot easier to look at this. Just bear with me a second. Let's go back. Right. So as you can see here, if you want to get back to how it was, just click auto. Right. If you ever want to get back to your chart, just go over here and click auto. Okay, and they'll take you back. This is linear. That'll put you on a linear scale, which we don't want. We want to be on logarithmic. Okay. So here we can see better volume. So what happened here? Okay, and let's just increase visibility here. So swing failure patterns come down, come back above this support here, this previous low, found support, and then gone. So what's the entry trigger here? The entry trigger here, right, is the increase in volume. Now it's hard to tell here, but on balance volume, it's giving us a better indication of that. So here we have the increase, right? It's going up, especially here. Well, it's coming up, boom, up it goes. That's your entry trigger right there. All this area here comes back, retraces, keeps going. Now, why I say this is a scalping strategy is because the idea of this is to get in and out quickly. Okay, because if we look at, say, let's go here and look at our price range, right, which will give us our percentage. If we say had entered on this back test of this previous low, and we took profits, say, up here, that's a 300% gain. 300%. You could have taken profits, down here at 100%, taken out your initial investment, right, and then let it ride up to here. Now, that's a 300% gain. In normal trading, a 300% gain is massive. If you 300% in Forex or 300% stocks is massive. But we can do this in what? Let's see how long that took to do a 300% gain from here, roughly, to there. Where are we here? 3 hours and 40 minutes. Just make 300%. It shows you how easy it is to scalp these things, but you have to be quick. Okay, you have to be quick. Now, what else can we use to enter this trade here? We've got back into our 0.75, 0.786 blue pocket. Front runs 886, but we're in this area, right? So there's one level of confluence. It's come back. It's swing failure patterned the previous low and come back in and found support. There's 2 levels of confluence. We have increase in volume. There's 3, right? Now, so that means, right, we have 3 levels of confluence for an entry trigger here. Okay. So now let's see what else we can find. Now, nothing else is grabbing me. We are on there's nothing really here from an order block sense. I mean, you could say, we're in a pretty low time frame here, but you could say that, this tiny little order block here, right, was confluence. Okay. So that little candle there, that little bugger there, see that one? That's your order block, right? It's only on a 5 minute, but look how price comes down and respects it. Boom, up she goes. That's for this section here. It's not important, but I'm just giving you an example of how order blocks can work, even though it's on a 5 minute. I know it's pretty low, but it does work, right? Now, we'll get rid of that. Now, what I want to put on here for this initial part is I want to put on my fixed range volume profile. Okay, so we go to this one here, go to projection, we go down to fixed range volume profile. So now what we do is we have the magnet tool on. So if you see, the magnet tool will automatically go to a candle body wick, a candle wick or a candle body, right? It automatically lock itself onto, which is great because it gives you the exact penny of where the wick goes or the candle body goes, right? So we take our fixed range volume profile, we take the cursor to here, and we take it, let's take it to here, right? Now, I want to change the settings of this fixed range volume profile, right? So we'll change the settings. Now we'll go to inputs. See how we have this, we have these bars here, right? I want to change the row size. There it is on 140. Why is that not changing? Just bear with me a second. Let's just change that. 300. It doesn't want to change for some reason. Why is that? Why do I want to change? Yeah, that's fine. Inputs. Why do I want to change? I usually like about 140 for these. It just changes the bar. For some reason, the bar won't change. Okay, look, we'll forget about that. But this is our fixed range volume profile, right? I'll update this in a further video. So a fixed range volume profile gives us the volume profile of a specific range that we select. So I've taken this area here, and it's given us where the most volume has been traded here. Okay, and as you can see, this is called our point of control, right? And this gives us the level where the most volume has been transacted, right? So if we take now, normally on TradingView, the volume profile will also give you what's called the value area low, which is the bottom of this candle here, and the value area high, which is the top of this one here. So with Dex Screener, we're going to have to add this in. Okay, so I just take my horizontal line, right, tool, click that. We take the line to the bottom of that candle and we add it in. Okay, so as you can see, I've dragged this from here to here. So we've only got this much volume profile here. And what can you see? Okay, straight up we can see price has respected the value area low of this range. So what does that mean? There's another data point. Not only do we have, and I'll get rid of this just so you can see, right? We'll get rid of that. Not only do we have 1, increase in volume. 2, we have a retracement to our blue pocket, and it just front runs the 886. That's the retracement confluence we need for an entry. There's 2 levels of confluence: volume, retracement, increase in volume. Two levels. On top of that, we have a swing failure pattern of the previous low. Price comes down, swings it back above, finds support above this previous low, right? That's number 3. What is number 4? Number 4 is that price has come back above and into the range. Back above this value area low, right? Which is this line here. So what we can do, just so you can see that, is we can add text to this. So we'll call that the value area low of this range, right? And we want that, see it here, over here. And if it's in the text alignment, it'll say, generally it'll center it. So, it's there, but you just change it. You go left to right, right. Always have it on the right. Boom. There we go. So we have the value area low here. Now, if we put that value area low back on, the fixed range profile back on, right, back to this level here. Oops. Where was it? Where was it here? It has changed. Why has it changed? There we go, sorry. I was on a 15-minute chart, that's why it was confusing me. Now, if we pull that to this level here, what we can see is that once price came back up to here, right, it came up and it respected the 0.5 level of Fibonacci, but also came up and nearly came back to the value area high of this range, which we can mark here in blue. So how do we know when to take profits in this range? Well, the first level is the value area high, right? Once you get it back above this point of control, that could be a take profit 1, because the increase in price from there to there is, let's see that, I'll just take this magnet tool off. So if we take it from here to, let's say, the value area, the point of control, that's 50%. That's a respectable take profit, right? You can mitigate your losses or any losses and put some money in your bank by taking profit here. The point of control is always an important level to take profits, right? No matter what chart you're on. As you can see, prices come up. It's rejected from there, and it's come back down. So it is an important level to take profits at. Even though it's 50% or nearly 60 is very respectable, right? 55%. That's a very respectable level, and it's moved very quickly. So you've made 50% in what? 20, 30 minutes, okay? But let's say you didn't take profits here. Where would you take profits? Well, basically, your value area high would be your next level, which I would have taken profits before then. I'll always take profits at 100%, always. Because you know that you are free and clear. There is nothing else left on the table, and any trade is money in the bank now, right? You can just let it ride, and you don't have to worry. And this is what's important about risk management, is to make clear and concise decisions, anxiety-free. And this is what proper risk management gives you. And this is why I'll reflect on what I said earlier. Proper risk management gives you the ability to decide whether scared money don't make money, or whether, the best trade you make is the one you never take. It gives you the ability to differentiate between the two and execute either one, just like we've done now, okay? If I was scared about entering this trade, I'd be scared for a lot of reasons. One, I'd be scared because I'm risking too much. I wouldn't have entered it because I don't know what to do. So that's why you've got to reduce your position size. If you've got 10 SOL, right, don't put 10 SOL on it. Don't even put 1 SOL on it. If you have 100 SOL, let's say, proper risk management strategy means that you should only risk 1% on each trade. So 1% would be 1 SOL if you had 100 SOL. If you had 10 SOL, it'd be 0.1. right? That's how you win. Like the thing is in meme coins, I know people want to risk more because they can spend less to make higher gains. So you can adjust your risk management strategy to suit yourself. So let's say you have, one. Let's say you're risking. Let's say you have 10 Sol in your bank, right? That you're playing with, and this is just an example. Bring it down to 0.5. Make your trades 0.5 or 0.2. A lot of people look at it and go, oh, okay, I've got 10 Sol. If I risk 1 Sol on each trade, I've got 10 times the opportunity to make my money. But let me tell you right now, you will, if you lose, I'm telling you, you will lose 98% of your trades. 98% of the time, your portfolio on that trade will go down 80%. So really, your 10 Sol you're turning into 1, really, or less than, if you employ that strategy. If you're new here and you're thinking that you're gonna find a winner overnight and have that lottery ticket trade that goes from 1 Sol to 1,000 Sol, I'm going to tell you now, it's not going to happen. It can happen. It can, but it won't. Why? Because most traders lose. Now, I'm trying to teach you here how to win, right? But you have to do it with a mindset of small wins, right? And letting your small wins run into big wins. And how you do that is with proper risk management, proper technical analysis, and entering your trades with more than one level of confluence. It's a game of probabilities. You want as many probabilities in your favor to maximize the potential of a profitable return. Okay, so back to where we were. We've entered our trade here on our fourth level of confluence, which was getting back above the value area low here on increasing volume, right? We've pumped up. We've taken profits here, right? And we've taken profits here at 100%, and we're free and clear, right? Now, from here to here, we've run up another, 100%, let's say. So you've just made another 100% there. So you could have chosen to take profits there, got it completely out of the trade, or carry on. So if you hadn't have gotten out there, price would have retraced it back down almost 100% to where you were. Okay. But if you had to let it ride, well, you'd be up nearly 300%. But see how you took out that initial trade. The anxiety's gone. It doesn't matter now because you were free to let it ride if you want. If price had just dumped right back down to here and ended up going minus whatever, back down to say these levels here, you'd be down 80%, but you'd still be up 20%. So you'd still have something, but it wouldn't be much. But you can get out of the trade, and your risk is gone. You've got no risk because you took profits back here at 100%. Okay, so that's the first initial part of this trade here on Perplay. Okay, 4 levels of confluence, clear entry trigger here. Right, let's go back to our little brush. Clear entry trigger here for a 300% gain. Price retraces, comes back down. If you took your profits around here, we're free and clear, 100%. Easy. Now, very straightforward to understand. Okay, and that's just using the deck screener tools at our disposal. So now what I'm going to look at is further down the track how we could have carried on this trade, right? And how we could have re-entered. Okay, so we'll get rid of all this. Now, I'll leave the volume profile there. I will take away the value area high and the value area low, and also this swing failure pattern, right? So now what do I see here? We'll also take away this drawing. Excuse me for a second. So first of all, what we'll take here is this fixed range volume profile, and we'll drag it all the way to here, okay? Now, what this is giving us is an idea of where the volume has occurred. Now, I really want to change I'm going to get rid of that. I'm going to start again with the new fixed range. Just bear with me because that's really doing my head in. So we'll take from the point here, right? We'll pull it across before the pump. So let's say to about here. I want to go to settings and I want to change my row size. Yeah, so that's why. Oh, what the fuck? Hang on a minute. Yeah, number of rows. Why is this not changing? Come on. Why? Why do you do this to me? So this is what really bugs me about deck screening. You can't save your tools. So, and for some reason, it's not changing. No, went up, down. No, always up, down. Why is this not changing? It's not changing at all. 300. No, it's not the value. Anyway, look, I'll have this change in another in my next video. But once again, for the sake of this, we can find our second entry point, okay, on this token. Now, this token here, let's have a look at it overall. This token, if we go to a 4-hour level, right, this token has gone up. Let's see here. A total of, just got to get this here. Let's just say we took it from, down here. This token has gone up a total, of, so let's just say we took it from, right, this, put the magnet tool back on, these lows here, right, from where we're at, this token has gone up 42,000%. 42,000%. Now, how do we find the entry point on tokens like this? The first thing is, this strategy is purely to minimize your losses. You're not going to win every one. That's it. You're never going to win every trade. And the idea is to not lose every trade. The idea is to get 70% winners and 30% losses. If you keep your average up like that and you do 10 trades a day, you're doing well. Okay, you're doing very well, especially in this space. But if you're all having 70% losses and 30% wins, you're not doing very well at all. If you're having that type of performance, or if you're performing that poorly, you need to step away from the computer. You need to go for a walk, get away from your phone, and you need to reevaluate what you're doing, because you're just going to continue losing money. And I must say, in this space, 70% losses and 30% wins is actually good for some people, right? Because they just see a token, they just see a call, or they look at something and they don't do the proper research into the socials prior, they don't do their proper technical analysis, and they don't give themselves the best edge to find the best setups and to find the best probabilities, right? So how do we get in ourselves in another position, to make nearly a 42,000% gain? Well, we'll go back to the 5-minute chart, right? Just bear with me again. Scroll back. Load the data to load. Okay, I'll go back here. Okay, so now we already have our fixed range volume profile here. So if you were one of the lucky ones, right, who identified this trade earlier, right, and you got in, say, where was it, here, right, and you entered there, like we previously discussed, well, then you could have let this ride. But what you would have seen in the meantime is price come from here all the way down to the bottom, right, down here, and you would have thought the coin was dead, okay? So for the sake of this strategy, we'll take this token, we'll take the our Fibonacci retracement tool from low to high, right? And instead of taking it from that peak to that peak, we'll take it from this peak to this peak, right? So we'll take in the whole range of this area, this whole range. Now, what can you see straight up? Now, if I was in this trade from here, I would have taken profits here and likely would have done things. I would have completely got out there, or I would have taken profits and let the rest ride. And if I hadn't let the rest ride, I would have set a stop loss, right, under under this 886 around here somewhere, probably about 10% under that, right? Because in my book, if price comes under this 886 level, right, if it comes under there, well, the token's considered dead to me with this strategy. It is to me, right? It may not be to you, but to me it is. That's why it's the red zone. As I said before, different strategies for different, using different strategies. I'm using the probabilities of this strategy, saying that if price goes below here, the token's dead, right, for this example. There are other strategies where price comes down here, like if price goes, if price comes back down here and below these levels, you can get some great entries, no doubt about it. But that's for a different day. Okay, so we'll look at this for today. So what can you see here? Okay, if we pull this Fibonacci retracement from this low to this high, what we can see is this price came down, it peaked back above, and then came down again. But then it came back above, found support here, and then pumped. Now, for me, this isn't an ideal entry, okay, because there isn't enough data here for me to go, okay, we're back above here. Yes, volume's gone up, but what else is supporting it? Nothing really. It's just an increase in volume. Some people would say, yes, that's a good trade, I'll execute that. For me, no. That doesn't give me enough. So what I'm looking at is this retracement here. And what happens here perfectly is price comes back down and it touches the 886 to the absolute cent, okay, to the cent. Now, Fibonacci theory will say you take it from the previous low to the previous high, right? So we'll take it from here. And where does it come back to? It comes back down once again to the 886, right? It only sweeps it for a very short period of time, but it comes back and it just ranges here for a bit, okay? So for me, this is a support level. This is a very important level. Now we'll go back to our fixed range volume profile. We'll take it from this point all the way to here before the pump, right? Now, where does price find support at? Not only does it find support at our 886, it finds support at our value area low of the range. See that? Precisely. Now, there's two levels of confluence there. Two levels. One, value area low, right? And we also have our 886. Okay? There's two levels. Now, what can we back this up with? Now, we can also back this up with the fact that price not only has it found support on that value area low, right? We can see that support has also found as price has also found support here. See that there? This isn't what I'd call an order block area, but we could just an area of support. On this value area low on this 886, you can see that price has come down, right? Found support, pumped. Come back below, come back up, found resistance, come back up again, up, found support again, so on and so forth. And as prices pump and come back up, we've also found support on this area here too. So there's 3 levels of confluence, right? 3 levels that we can add in. So there's 3 all up for a trade. So I'd be watching this area here going, okay, this would be my trade here, possibly, or another retest here, depending on what volume does. Now, this initial one, right, this initial one here, let's see what volume is doing. Volume isn't doing a whole lot, okay? So this one, it did increase a little bit, but I would have been a little wary, okay, because it's not that convincing. So I probably wouldn't have taken this initial trade. I would have watched to see what it had done, because one thing with these levels you'll find is price doesn't always pump when it hits a level. It'll range for a period. So what's really important in trading is to let things play out. Don't be too early. You're better off being a bit late than too early, because you need to let the market show its hand. You want the trades to come to you, not you seeking them out, okay? So let it come to you. Let the market show its hand, okay? Let these tokens, don't have the fear of missing out, okay? When you get that feeling of like, oh, I've got to get in now because the price is just going to go, that's a money killer. Don't do that. Never do that. You need to let the market show its hand. You need to find the levels, the important levels, right, where you want to enter your trades, right? 98% of trading is planning the trade. And you don't want to enter any trade unless you've planned it, right? You don't want to just see a token and go, oh, yes, price is going up, I'll come in and I'll enter. Yeah, I'm going into here because price is going to moon. And look what happens. Blech. Right? Very, very important. Okay, so you really don't want to have that strategy, because, this is what will happen. You will get wrecked. So you need to have a plan. What was our plan here? Well, we had a plan here. We had levels of confluence. We took profits. Price dumped. Right. We made money. What did we do here? I didn't want to enter here. I wanted to see the market play its hand more. Is this going to be a rug pull, or is this going to be a token that's going to find support backed up by a strong community, which we haven't looked at yet, but let's just say it is. And then let it play out and show its hand and show us the levels where it wants to find support. And it did that. So here we have 886 retracement. We have a support and resistance flip area. Very important. That's 2. We also have the value area low of the range. That's 3. That's 3 levels for a trade. Okay? So now price comes back down. We have our trigger point, which is this whole area. Okay? This area here. Price comes back below the 886. It comes back above, right? And what happens? We have a clear increase in volume. Now, you never want to enter a trade unless there is an increase in volume, right? Because it needs to be supported by that. If price is going up and volume is flatlining, that's not a good sign, right? So here we can see, if we just scroll in a bit, price, volume, see how this one's a little bit delayed? See how the volume here is a bit more delayed? With your on balance volume, this indicator here, on balance volume, it can give you a better insight into what volume is doing on a basic level, okay? Because this deck screen is very basic, but it is very handy to add this in with your volume candles, okay? It gives you a little bit more of an insight. So what we have, 1, 886, number 1. 2, we have our support and resistance area. 3, we have our value area low. 4, we have our increase in volume. 5, now what's number 5? 5 is, which goes with the volume, is a reclaim. Price comes down, under, and it reclaims, and then goes. That's our 5th. That's number 5. This here is where I'd be entering, right there. Because as you can see, volume's coming up, and we're away. And what does price do from there? So 5 levels of confluence. What happens there? Price. Well, it's self-explanatory. She just moons. Okay? And just from there to there alone, you got to let that ride, right? Our price range is from here to here. Let's just say we get value area low. We took that up. Let's just say a 6,000%. 6,000%. That, just from planning our trade and using simple confluence levels, we have executed a trade of 6,000%, right? Now, they're not all going to end like this. They're not. It's not realistic. But the idea is, as I showed you, is to get yourself in a position, in a good position, plan the trade, use your indicators, use your tools, and get your levels of confluence together to find the best entries. Plan your trade, okay? Make it work for you. Don't work for it. Let the market show its hand, okay? And you can find these trades, and you can find them being stress-free, right? Because you know that you've entered low, you've taken profits, and you've either let the rest ride or you've taken profits on the way up and you're making money on the way up. Beautiful. Who wouldn't want that? Okay. So for today, that's all we've got for today. It was just a simple video where I wanted to show you my main strategy and what Memecoin Academy is about. And this is what we're about. We're about planning our trades, trying to find the best quality trades, and taking profits and paying yourself. And, and this is the strategy where you can find those. Your trades can turn into, your scalps can turn in from making 100% to 6,000%, to 42,000%. And that's what it's about. It gives you the ability to be stress-free to let these ride. Okay? So that's all for today. I hope you enjoyed that. I will be giving you episodes as frequently as possible, probably every second day. And I hope to share more of my knowledge with you guys. I'll go in depth into more specifics in depth in some of these indicators and some more strategies with you. So if you like today's content, please hit the subscribe and like button, and I'll see you next time. Thanks again.